Tesla's down 3.7% today, and a lot of people are wondering if this is the bottom before the We Robot event this Thursday. Now, for those of you who are interested in my thoughts on the event and what specifically I'm going to look for, that video will be coming out tomorrow. I go over the potential cyber cab, some brand deals and partnerships that I think would help them, potentially might be explained at that event, as well as what I'm looking for as far as them proposing the revenue model of how all of this is going to work and much more. That video is going to be out tomorrow. This video is talking more about the technicals of this current setup. So if we look at Tesla, you're going to see prices down 4% today. And one of the things that we heavily focus on here within this community and on this channel is going to be institutional buy and sell zones. I've created a completely free course going over these smart money levels, and it will explain the concept that we're going to go over in this video in much more detail. And that course is completely free. The link is in the description. You're going to notice if we look at the past couple of months of Tesla and we take a swing low on our fib retracement from $170 up to this swing high of $263. This was when Tesla was in a very, very, very strong breakout, and we thought that we would have the robotaxi event in August. Well, once we see that that's not going to happen, Tesla begins to sell off. And then on top of that, we get bad earnings, which continues to intensify that sell-off. Now, when we're drawing these Fibonacci zones, I want you to understand that there's nothing mathematical that's happening or some crazy indication. All these Fibonacci levels are doing is isolating specific moments in the market, areas for us to buy within a strong bullish trend. So obviously, Tesla has a very strong bullish trend back here. But for us to be buying up at 260, buying up at 270, it's not smart. We're not getting a discount. So what we do is we turn on our Fibonacci to show us the 0.618 and the 0.786. This area is going to be considered our institutional buying zone. And the reason that this is our institutional buying zone is that if we're looking at this snapshot within the market, basically the run from 170 up to $263, this is going to be a 78% discount, not actual percentage, but 78% pullback of that breakout, which means that you're basically getting Tesla at an 80% discount over the past couple of months. This is normally going to be the area that big money steps in order to save the overall trend, because they're not going to buy. Because you have to think of it this way. Any institution who is accumulating Tesla, right? And the reason I say institutions is they're the ones who move the market. I don't care about retail investors. We can't do anything. We need institutions in order to move the market. So if you're an institution who's been building maybe 10, 20, 50, $100 million position on Tesla for the past couple of months between 170, 190, and now Tesla is up 60%, in 30 days, are you going to continue to buy, or are you going to start to take profits? Of course, you're going to take profits because you were buying Tesla at a discount, and no offense to anybody who is buying Tesla back here, but those people were not buying Tesla at a discount. They were overpaying in the short term. Now, you can overpay and still make money. Like if you were to have bought a house in 2020 and you overpaid, you probably are still making money on the house today just because of how strong the market is. But in most cases, we want to buy within discount ranges. Here's the key thing: within a strong uptrend. We don't want to buy a discount in a downtrending market. So what we're looking for and what we've been covering, and our story doesn't change here, right? We post the same type of videos every single day, is that we are waiting for Tesla to pull back into this smart money zone, and we're expecting a bounce off of this area back up to $270, which would be about a 46% move in about a month or so. And you'll notice that price pulled back into this institutional buy range, and guess what? Buyers stepped in. This might sound obvious, but of course this is going to bounce here because everyone who bought here and then took profits is just going to reload again at the same exact area and most likely take profits unless they think that there's going to be more upside, which I do think there's going to be more upside, and I believe they think that there's going to be more upside. So you're going to notice that Tesla comes right back up, touches this liquidity level, and now we're currently pulling back. So what do I think is going to happen at this moment? Well, the first thing to understand is that the trend is still bullish. We're still holding this overall trend, and there's nothing to be worried about until that trend level breaks. What I want to do here is zoom in on a 1 hour and show you the same exact principles that we just used, but on a different time frame. Now, I recommend that even long-term investors learn how to draw these Fibonacci levels because it is basically plotting out your best time to buy your long-term investments, which is why I made that course in the first place. But even if you're a day trader or a swing trader, these types of patterns show up all over the place. There are multiple of these smaller setups. You can notice that when price swings up on this first leg, we get a high of $226. And from that point, price pulls right back into our smart money and institutional buy level before bouncing and breaking out once again. Now we can take that same exact Fibonacci, this time from our new swing low to our new swing high, and you're going to notice that price pulls right back into what? The buy zone. So we could have accumulated within this institutional buy range here and look to take our profits once again at higher highs or equal highs, which is a 10% move. And now the same exact type of setup is happening once again. If we take our Fibonacci from swing high to swing low, you'll notice that our institutional buy range is from $240 to $235, which is normally going to be where we bounce. The lowest that I think we'll see before the actual event is going to be down here at about $232. That would be our smart money level. And I do think that from this point, we will most likely bounce off of this smart money level, come back to test $268. And if you wanted just an easier way to do all that without drawing out your Fibonacci's, then you can just use the market bias, which we have a course showing you guys how to use this and set it up with our proprietary settings in the description. But basically, if you turn on the daily market bias, it is going to show you where the 1 hour institutional buying zone is. So the top of the market bias is 240, bottom of the market bias is 233. So accumulating within this range is what you want to see for that next move back up to 270 and $300. Now, if we see $230 break, there is going to be some trouble. I think that if $230 break, then there's a very high chance that we'll see price back down at $220 and $200. But we're going to talk about the downside consequences a little bit more in the video overlooking what I think is going to happen at the Robotaxi event. Let me know what you guys think is going to happen in the comments, and let me know if you're buying this dip into the We Robot event. If you want to learn more about all of the indicators that you see in this video, as well as the proprietary settings and the step-by-step trading system that I've built, you can take all of our courses completely free with the link in the description.